Good afternoon, everybody. Welcome back to a Chart Nerd technical analysis video. Today we will be discussing the likes of Shrapnel. The ticker is SHRAP, and we're looking at the weekly, and I will also look at the daily time frame. Now, before I start, this video is not financial advice and is all for educational and entertainment purposes only. If you do enjoy the content, however, please do give it a thumbs up, a comment, subscribe, and maybe even hit that notification bell if I'm lucky. So diving into Shrapnel right here. I did post an update a couple of weeks ago on SHRAP, and I think in that video I previously mentioned about this key level of support that was lost for SHRAP back here in April of 2024. And we had a technical target from a double top pattern where you had a high, the current all-time high, and then we had a lower high, and this indicated depleting buying pressure. Okay, and we actually rolled over back down to this level and we lost it. Now, we could have foreseen this target or this move happening if we'd have only just played correctly on this breakdown, right? Because what happened is once SHRAP actually lost this level of support, it had a technical target from this double top back down to 0.077, and you can see that this target was pretty much met to a T. Now, it's interesting in what happened at this point, because for me it would have been nice to see SHRAP retest this level of previous support and meet it as resistance, and then come back for a higher low and sort of build up a foundation under this level of resistance, but that didn't happen. Now, the reason for that is, if we have a little look at the daily time frame here, a little bit more zoomed in, what you'll notice is when we actually came down and met this technical target of the double top breakdown that I was speaking to you about, what happened is we ran up to the daily 20 EMA. Now, we started losing this and hitting our heads on it back in March, and ever since you can see that this yellow line has acted as strong resistance. Now, we came down and met our technical target from the double top, and what happened is we then rallied back up to this 20 EMA on the daily, but failed to break through, and it just acted as a key level of resistance moving forward, and we eventually carried on to break down. Now, what you'll notice equally here with this 20 EMA is that from this low here back in May, we had an ascending level of support, and we had this sort of descending level of resistance where we were stuck between a rock and a hard place for a few weeks, and we would have had a breakdown target of this as well, which I do think would have led us, or did lead us, back down to the initial breakdown target of this double top pattern. Okay, so we had this retest back down here. Now, equally, because we've lost this daily time frame, because we've lost this double top low, right now this level here will act as resistance moving forward, and that is a price tag of 0.07. What we need to see here, if this is the lows that we're holding right now and we're building this sort of structure, we need to see ourselves get back above the EMA, hold it, and at least start retesting this previous low that we came up to the EMAs, got rejected, capitulated, rejected. You can see over time that this daily 20 EMA is the key resistance. Okay, it's just forcing us down every time we come into it. So seeing closes above it and holding above this daily 20 EMA could show potential signs of relief here. It could. And it could mark the bottom. Now, you can see we've had a couple of fake outs along the way. We had a couple of fake outs here too. So nothing too convincing, but we are, let's all be it considered, from this all-time high, currently down roughly 86%. So in my eyes, we're evidently closer to a bottom than we are a top. What needs to occur here? If we look at the weekly, okay, again, zooming back out, if this is the low, how we can sort of indicate if it potentially is by going from the last previous local high in May back down to this wick, right? Because we were going from this high, retracing back to this wick. We lost support and capitulated on the 17th of June right through this 0.07 support. And what's happened is we've actually come down to the 1618 target here at 0.055. So right now, for this to be the low, this level has to hold. Negating that and starting to come up and coil. Look, you can see we're coiling between the 1272 and the zeros and the 1618. If we fail to break up here, and equally if we fail to get back above the daily 20 EMA, which is in fact actually on our heads right this second. If we do fail to get back above that, then we're in some trouble and could be coming back for some deeper waters. But albeit considered, we've met the 1618 target. For the last couple of weeks, we've been holding it as support. We have to see some sort of relief here. We need to see some sort of signs of a reversing signal indicating to us that, okay, this correction is in. Because right now, it's quite hard to accurately try and predict a pinpoint bottom. let's look at some indicators. Let's look at the Gaussian channel on the daily, on the weekly time frame, in fact. So what we're seeing right now, this isn't too bad a sign. Now the Gaussian, we like to use the upper band, the mid band, and the lower band as acting as key levels of support or resistance, right? So when we're way overextended and extremely far in distance from this Gaussian, there's no surprise that you're going to get dragged back down to it. Now what you can notice is that on the weekly on this weekly Gaussian chart, we did hang around this mid band for a few weeks, but the fact that we'd lost it and closed below it on the week of June the 3rd, so you can see here on June the 3rd, this is the week where we lost support of the mid band, okay, and we capitulated, and right now we have deviated outside of the lower band area of support. What this tells me is this is just optimal opportunity to get involved, and not financial advice, as I keep saying, guys, but we have been in an extremely large downtrend, and we haven't, since losing the lower band, we haven't actually even back tested the lower band for a resistance retest yet. So it would be ironic, wouldn't it, to see the double top pattern play out that we had as resistance, okay? We lost the support, sorry, and the double top pattern played out. So let's get that back on for us very quickly. So we had this double top pattern that played out. When we lost the support of the double top, we met the technical target, okay, and came to this wick. We then ran back up to the daily 20 EMA, got rejected, and have since lost this wick support and haven't even backtested that as resistance. But the important thing here is this low also ties up currently with the low band of the Gaussian channel on the daily time frame. So is this indicating that potentially off of this 0.05, we're holding this ascending level of support? Are we right now looking for a potential retest of this Gaussian channel as it's coming down, and equally coming back up to this previous wick breakdown target at 0.079? Potentially. And what we could see is a left shoulder. This is the head and the bottom. Right now we come up to resistance, pull back for the potential right shoulder, which would be nice to see, and we create some sort of inverse head and shoulders under resistance, looking for the next move and breakout back up to higher highs for shrapnel. If this was the case, we could actually get a technical target in for us here off of this low. And if we do sort of come back where we've got this left shoulder, you've got this head right now, if we can come up and create some sort of right shoulder here underneath this key level of resistance, then we could have a breakout target from this wick high to this wick low. And once we do start tackling out of resistance, you can see that it will bring us back up towards 11 cents, which ties up with the daily sort of top band of this resistance here on the Gaussian channel 2. So there's a lot of work to be done, a hell of a lot of work to be done, but that's a quick update for me today on shrapnel, guys, on the larger time frame. Just a quick breakdown again, a quick review. Right now, nothing too interesting over the last couple of weeks, okay? We're just very choppy, very sideways, and we're literally caught between a level of resistance and a key level of support. You can see here that this has been acting as resistance in this sort of trend for a very long time. So if we do see this resistance tackled, this descending resistance on our head, I would expect a move at least up to the lower band of this Gaussian channel, and at least up to this previous wick low that we've lost the support and potentially are looking to backtest as resistance at 0.079 cents. So key takeaways, for this to be the low, we have to hold this ascending support, we have to break out of descending resistance, and we have to see a retest of this lower band Gaussian channel, and equally this wick low from the larger double top breakdown that I've spoke about previously. I hope you enjoyed the content, guys, from Chart Nerd TA. Take care. Peace out.